So I would expect, to the extent that the dollar keeps staying this high, after 6, 12, 18, 24 months, you get one of those response functions kick in and drop the dollar by some significant amount. So I kind of put that right now in the too hard category. I think as those trends become kind of entrenched in, I think that gold probably has a pretty persistent bid under it. So I'd expect generally flat to up in any given, long enough period to kind of get past noise and brief overbought periods and things like that. And so if oil goes up as fast as gold, some of their margins can be pressured. Whereas if gold goes up faster than oil, they're generally in a pretty good position. I think because they haven't really moved yet, they probably have more room to go. Um, I generally prefer the metal itself to most miners, except for some of the highest quality ones.
Hmm.
I think that in order to get into that market, you have to be looking at the geology. You have to be kind of doing a lot of kind of hands-on company by company work. But yeah, in general, I would say I'm fairly bullish on that sector.
Lyn Alden discusses the impact of monetary policy on the dollar index, predicting potential shifts in the next 12 to 24 months. Additionally, she analyzes gold's trajectory, expecting long-term growth due to central bank buying and fiscal dominance trends. Alden suggests keeping an eye on energy prices relative to gold for certain sectors. Considering potential capital shifts from treasury markets to gold, she anticipates significant growth in gold prices over the next 5 to 10 years.
For the dollar index, as long as they're able to maintain the current situation of fairly tight monetary policy and like they're not expanding the Fed balance sheet, for example,
Hmm.
and they're running these pretty big deficits and they have decent positive real rates, at least relative to official CPI. I think that gives a pretty significant bid to the dollar, at least compared to, say, the euro and the yen. I don't expect that to go sharply down anytime soon. But there's a couple scenarios to watch out for. Maybe not the next 12 months, but maybe after that, which is one, if you look at the New York Fed's projections for what the balance sheet's going to do, the Federal Reserve balance sheet, they
Hmm.
see it bottoming by, late 2024 or early 2025, and then going up from there at a rate that is roughly in line with nominal GDP. So they will go back likely to monetizing fiscal deficits, um, and maintaining, reserves in the banking system that are relative to GDP at a certain scale and relative to the money supply. And so that could be a dollar weakening period, or at least maybe the dollar stops going up at that point. Um, and so that's kind of a factor that I'm watching. In addition, whenever the dollar is strong, and this is, Luke Groman covers this quite extensively. Whenever the dollar gets strong, right now, on average, in aggregate, foreign holders have more U.S. assets than U.S. has of their assets. And so when the dollar gets tight and squeezes their liabilities, a lot of them have assets that they can sell in order to get dollars to meet their liabilities. And so if the dollar gets too strong, usually you start to see disorderly, illiquid treasury markets. You get messier treasury auctions, and then usually some sort of response function comes. Either the Fed steps in and provides liquidity for those markets, or the Treasury comes in and shortens its average duration and basically, fixes the supply characteristics of some of those
Hmm.
longer duration bonds. Or like a plaza accord, basically like, central banks coordinate to say, okay, this is becoming untenable for both of us. Let's try to manage this down a little bit. So I would expect, to the extent that the dollar keeps staying this high, after 6, 12, 18, 24 months, you get one of those response functions kick in and drop the dollar by some significant amount. So I kind of put that right now in the too hard category, even though it's something I'm watching pretty closely because I don't necessarily think that's the biggest factor. Um, I do expect in the next 24 months, and you mentioned Michael Howe with liquidity. So liquidity
Yep.
bottomed in late 2022 and then went up. I see that in my analysis as well. A lot of that is tied to the dollar index. That basically global liquidity is ultimately measured in dollars.
Hmm.
And so that the dollar strength is not the only variable in there, but it's a big variable. I do expect a positive liquidity cycle, meaning a lower dollar move sometime over the next 24 months. But at the moment, I don't have a firm conviction if that starts in the next 6 months or not, for example. I generally expect gold to be higher, say call it 24 months from now. 12-month predictions are always challenging. I prefer kind of
Yeah.
24-month periods. I think it got a little bit overbought recently. But I'm pretty structurally bullish on gold because I think some of these trends that we're seeing, central bank buyings of gold, a gradual shift toward a more multipolar reserve management type of world,
Hmm.
and ongoing fiscal dominance and recognition of fiscal dominance. I think as those trends become kind of entrenched in, I think that gold probably has a pretty persistent bid under it. So I'd expect generally flat to up in any given, long enough period to kind of get past noise and brief overbought periods and things like that. So my base case is up for those as well. Um, the challenge with some of those is that, oil's an expense for them. Basically, various energy inputs, whether to fuel their machines or even just provide tires for their, big machines and things like that. It's very kind of energy intensive, material intensive. And so if oil goes up as fast as gold, some of their margins can be pressured. Whereas if gold goes up faster than oil, they're generally in a pretty good position. I think because they haven't really moved yet, they probably have more room to go. Um, I generally prefer the metal itself to most miners, except for some of the highest quality ones.
Hmm.
I think that in order to get into that market, you have to be looking at the geology. You have to be kind of doing a lot of kind of hands-on company by company work. But yeah, in general, I would say I'm fairly bullish on that sector. I think so. Yeah, I think that yeah, again, not in any necessarily 6-month period, but I do expect that there's a pretty large amount of capital that is currently in treasury markets, that is currently in maybe large cap, mega cap stocks at 30, 40 times earnings, and some marginal percentage of that might want to get into gold.
Cool.
In my recent piece, I pointed out, Congressional Budget Office expects $20 trillion in net treasury issuance over the next 10 years. Um, they historically are conservative with their estimates, so basically the numbers end up being higher than they project. So let's call it 20 trillion minimum. Um, at current production rates and prices, about 2.5 trillion in new gold should come to market around that time.
Hmm.
If obviously, so if some percentage of that wants to flow into gold, the price is one of the key mechanisms to absorb some of that. So I would expect pretty decent above CPI gold growth over the next 5, 10 years.
Lyn Alden continues the discussion and delves into the intricacies of Bitcoin's price action and its correlation with global liquidity. She highlights the importance of bullish sentiment towards liquidity for Bitcoin's upward trajectory, anticipating higher liquidity levels in the next 24 months, potentially driving Bitcoin prices higher. Alden also examines on-chain indicators, suggesting that Bitcoin's bull market may still be in its middling phase. Looking ahead, Alden underscores the significance of Bitcoin's mobility in an era of fiscal dominance, emphasizing its role as mobile capital amidst potential government capital controls.
So one is that Bitcoin price action is historically very tied to global liquidity. And so a bullish case for Bitcoin you don't need to be bullish on global liquidity, but it very much helps to be bullish on global liquidity. And so again, next 6 months, I don't really have a firm view, but I do think that liquidity will be higher 24 months from now than it is now, and therefore I expect Bitcoin to probably also be higher. I also look at various on-chain indicators. So for example, whenever there's a bear market in Bitcoin, fast money gets out and long-term holders tend to accumulate. And then when you have one of those big bull markets, so more demand's coming in, but there's not a lot of new supply. And so you have to pry some of the supply out of the hands of longer-term holders. And that's somewhat measurable on chain. And so prior bull markets, you might have had, for example, let's say 70% of coins haven't moved in a year. They're held by longer term holders. And that might go down to 60%, for example, in a bull market. It might drop by 10, 20%, depending on the magnitude of the bull market. Um, and so far, that's only dropped by a handful of percent. So most indicators would suggest that the bull market is probably still in its middling phase. Rather than its later phase, assuming that global liquidity remains fairly decent. So I'm pretty bullish on Bitcoin with a say a 24-month period. And then I would also add that over a 10-year period, so for example, 20 plus trillion in treasuries coming to market, 2.5 trillion in gold at current prices and production rates coming to market. There's about $70 billion of gold of Bitcoin coming to market over the next 10 years at current prices. Production rates are fixed. So the only thing, if more capital wants to flow into Bitcoin, obviously the price would have to go up pretty substantially. And when we enter this kind of fourth turning fiscal dominance, kind of sovereign debt crisis type of scenario, what a lot of governments do is they try to do capital controls. They try to clamp down
Right.
and keep a captive audience is the phrase that I've seen in research papers by Reinhardt and others. And Bitcoin is mobile capital. It can flow across borders. You can memorize 12 words and bring your capital with you. Obviously, and we've already been seeing this, there's pushbacks against that capability. Governments don't particularly like the fact that bearer assets can move portably, right? So there will be frictions along the way. There will be attempts to surveil it all, attempts to target it with special taxes. This is a jurisdictional by jurisdictional thing. But I do think that that has a big role to play in that type of fiscal dominance world.
Today, we've explored insightful perspectives from Lyn Alden on the dynamics of the dollar index, gold, and Bitcoin, shedding light on their potential trajectories amidst global liquidity shifts and fiscal dominance. Alden's analysis underscores the importance of monitoring key indicators and understanding the interplay between monetary policies and asset performance. As we navigate these complex financial landscapes, your engagement and feedback are invaluable. Don't forget to subscribe for more expert insights, like this video, and share your thoughts in the comments below.